Thanks, guys. It's Lakshan here from Team Hyperplane. I have Garnika and Dulita from Team Hyperplane as well. Apologies for a bit of a very interesting start, a very interesting long day.
Without further ado, it's a crypto crisis. Everyone's kind of aware of the whole stablecoin issue that's taking precedence on news these days. And so just to give some context, okay, sure. Yeah, thanks, guys. So what's going on? The current economic climate, as most of you know, there's a lot of inflationary discussions going on. 40-year high inflation in the US, in the UK, in Sri Lanka, we have the third highest inflation in the world. That's something which we should not be proud of, but unfortunately is the case. And also it's driven by both the supply side shocks and bottlenecks due to prolonged shutdown periods during COVID, and also due to quantitative easing measures, which means monetary, loosening and low interest rates causing people to pent up the demand. So it's a bit of a mixed bag, but here we are talking about the crypto market today, and crypto has been in vogue for the last almost 4 or 5 years, especially in the last 3 years, where it has proven to be an asset class to itself, being an inflationary hedge, and kind of being discussed as a new age goal in the digital age. So stable coins, the point of discussion today, has been regarded as a safer bet given its kind of exposure into underlying assets which have fiat value to it. And today I have my colleagues Gamika and Tulita joining me, who are active traders in the space, and we will be starting with USDT and then going into USD. So just a little bit of snapshot on USDT. If you guys were following the crypto markets yesterday, USD had a bit of a volatile day, but things have normalized as of the last, I think, 15 minutes or so. So that's, I guess, some, solace for everyone. So how the breakdown of a stablecoin works is it has underlying value propositions. It has cash equivalents. Then you have government bonds. You have securitized loans. So it's a mixed bag. Think of it, if you're from a finance background, think of it like kind of a MBS, like a mortgage-backed security, but in a more digitalized version of it. So there's obviously inherent risk in the underlying assets, but the problem that we saw yesterday was people starting to question how valuable are these underlying assets and how sustainable are these models or these stable currency issuances are. So it's an interesting topic. So I think it's best to do a Q&A. So anyone who can, I think most of you guys can see the breakdown of the USDT here. And then with the next slide, I think Gamika, you can take over and talk about the technicalities and the points on that.
Right. Okay. I hope everyone can hear me. Yes, Lakshan was talking to you about crypto as a whole and USDTs and stable coins, etc. So let's really back just to figure out what happened, right? As we all know, the global economy is it's in a volatile situation. Excessive money printing, from the COVID times, congested supply chains with China trying to carry out a zero COVID policy, and Russia-Ukraine war, and it's in an unstable, precarious position. So what ends up happening is the markets have gone through a sell-off. I think over the past, over the yield to date, the S&P 500 is around 30% or about 20% down from January, from the 1st of January. So what's happening and why is it down? Inflation, as you might have followed, is at a 40-year high in the US, right? It's about 8.3% in for April, right? So what do you do when you have such a such a high inflation figure? The Fed is going to stop its money printing and it's going to try and increase the interest rates in an attempt to try and reel in the economic consequences of having inflation. So what happens? What is the impact of increasing the interest rates? First of all, the borrowing slows down. The economy slows down because it's difficult to borrow, and that can or may not lead to a recession. It depends on how the Fed manages to navigate the way in which it increases the interest rates. Naturally, an increase in the interest rate almost always corresponds to a slowdown in the global economy, So you have a sell-off. So, all right, okay, so fine. Okay, you have a sell-off and it's going to look kind of like this, right? So as you can see, if you come to the, to the chart below, you can see the S&P 500 now trading at like 4,000 plus 3,900 yesterday, right? From 4,800. So, okay, fine, it's bad, right? So why is it affecting cryptocurrency? Isn't it supposed to be this new way of having something decentralized, decoupled from the rest of the centralized world, right? Okay, so that comes to the question, is Bitcoin truly an inflation hedge? Right. So if you take the fundamentals, so the attributes that define Bitcoin, it effectively has something similar to gold. It's scarce, its inflation is controlled, right? And it's decentralized, right? And it also acts as a medium of exchange, just about everyone. So in theory, or even in practice, it has all the requirements required to be a very good inflation hedge, right? So, but it isn't. So why is it? If you take a look at Bitcoin, not this chart. If you go back behind, those two charts look very eerily similar, right? So the Bitcoin, the BTC chart and the S&P 500 chart look exact. In fact, when you run the correlations on this, it's 0.5 times, right? So the whatever BTC does, or whatever the S&P 500 does, BTC follows, right? And the reason for this correlation is because of the kind of investors who are now investing in Bitcoin. So I want to take you back to 2018, when Bitcoin was just starting to get popular, but to try and analyze who was buying Bitcoin back then. So sort of 2017, 18, 19 were mostly retail investors, sort of you and I. However, in leading up to 2020, 21, the largest buyers of cryptocurrency and Bitcoin especially were institutional investors. Now, institutional investors are a double-edged sword, right? They have good and the bad. When an institutional investor comes, you have to understand how they look at a risk, how they look at a portfolio, right? So in their portfolio, you have cash at the top, small percentage, and then they'd have assets like sort of long-term debt, so essentially treasury bills, commercial papers, etc. Then they'll have secured debt, unsecured debt, equity, and at the very bottom is going to be Bitcoin, right, or cryptocurrency. So what I mean by very bottom is from the lowest risk to the highest risk. So they do have faith in this currency, which is why they're investing in it, except it's standing at the bottom of their risk portfolio, which means should anything happen to the markets, the first thing that liquidity gets drawn out of is Bitcoin, right? So as a result, all of the volatility is sort of concentrated towards the bottom of this portfolio. I'm not saying that the rest of the portfolio hasn't got hit. They've been decimated as well, but it gets really bad for BTC, which is being traded like an asset. So should we worry about this? Short term, yeah, you're going to have to live with this. There's no other way. But think about it like this way. If you don't have institutional investors being interested in Bitcoin, despite its volatility, there is no way you're going to make it a $10 trillion asset, right? Like gold, or make it the size of the US money market. There's no way you're going to get Bitcoin to be $100,000, $200,000, $300,000 currency in the next 3 years, because you have to have that money moving. But this is the price you have to pay for it, right? And again, to hedge your despair, so to speak, is if you look back into to 1970s, 1980s, gold experienced volatility. So that actually looks like a chart of a cryptocurrency, but that is gold right after Richard Nixon came out, terminated the Bretton Woods gold peg. For the first time in history, gold went from being a currency to an asset, right? And no one knew how to value gold as an asset, and that's the result, right? So, gold is 3,000 years old, the best known inflation hedge for mankind, and it went through that. So it's not, you can't ask Bitcoin to be a perfect inflation hedge in the short term. It's a long-term thing, right? So, okay, so situation is bad, like I mentioned, for the for the economic crisis. So what can it get worse, right? Personal view, and I think a lot of people on Wall Street also have this kind of view, is that it can get a lot worse before it gets better, right? First of all, what the Fed has to do, coming back to the global macroeconomic economic view, is that they need to continue to increase the interest rates in 50 basis points hikes or 75 basis point hikes to try and reel in that inflation that's at 8.3%, right? So if they don't do that, they haven't solved the problem. But continuing to increase that inflation, the interest rate, means more and more of the economy is going to slow down, right? Which means more and more of the S&P 500 that you saw is probably likely going to come down. And just remember that Bitcoin is correlated to S&P 500. Think of Bitcoin as S&P 500 or a Nasdaq 100 stock levered by about 1.5 to 2 times beta. That means the S&P 500 goes down by 10%, BTC is going to do 20% on it. If it goes up by 10%, then it also does 20%. It's just a levered play on it, right? So if you think about it in that sense, it can get a lot worse, right? So I usually like to compare this back to the dot-com era, right? 1999, you had roughly 400 companies going IPO in 1999, okay, unheard of, and all of them were internet companies, right? In 2011, you had but maybe 2 or 3 of the original that went IPO in 1999. So what happened, right? You had, I'm going to draw that exact same comparison. You have 20,000 altcoins in the crypto space now, right? There were 400 IPO companies that went IPO, during the dot-com bubble. There are only a couple now. I think you know where this is going, right? So as Gareth Soloway, a famous trader, mentioned, there are 20,000 altcoins. There should be 20, right? So what's very likely to happen is, like I mentioned, from the risk portfolio side of it, as the liquidity dries up, Bitcoin gets hammered. Just imagine what's going to happen to the smaller projects out there that fail to give a couple of things that I have mentioned here, right? Firstly, they have to have real world utility. Some tangible value that you can bring to a market, right? Some of these coins, there are 20,000. Just imagine what most of these are created by forks, copy pasting of source codes, etc. Right? Some of them are meme coins, and some of them are outright Ponzi schemes, right? So it's very likely if we go into a recession, which can happen. Maybe it won't, but there are very high chances that it can happen, and the Fed is unable to navigate that properly, you're going to get a wipeout, right? It's a literal shakeout of the entire cryptocurrency market so that only a few will survive. So the natural question is, if that happens, what are the currencies that are likely going to survive? Going back to 1999, I mean, you had pet and you had toys and you had so many different companies. Amazon was there, very stable company back then. And today, Amazon continues to survive, right? All of those companies got demolished, and a lot of them, 99%, I think, went bust in the dot-com era. And Amazon was trading at, if I remember, 10 or 11 or around the 10s range, right? Today, Amazon share price is 4,000, right? It's the currencies that survive have a very high chance to be unbelievably valuable by the end of the end of the shakeup, right? That's one of the main points, that's talking points that have come up. Now, going back to Lakshan's point about stable coins, right? I'm sure a lot of us went through this. Right? It was a massive strain, especially for me and Dulitha, who believed in Terra, who basically got a reality check, right? So the Terra ecosystem is a very ambitious project. I mean, there's no arguing about it, but it just got caught in the wrong place and at the wrong time. And then there are, the conspiracy theories that maybe it is an attack. It's not entirely clear. It could be, but essentially, just to wrap it, in summary, Terra ecosystem is essentially two native tokens, right? The UST stablecoin and Luna, the risk on asset, right? So how this works is, the Luna, which is the risk on asset, is trying to absorb the volatility in the USD. So if let's say USD depegs to 0.8, what happens is a trader, arbitrage trader, can effectively buy USD at 0.8 and convert it to exactly $1 of Luna. $0.8 of USD and convert it to $1 of Luna, right? And the moment they do that, it burns this particular USD and mints a new token of Luna, right? So you saw what happened there, right? The supply in USD decline, so its price goes up. The supply in Luna increases by 1, so its price goes down, right? Supply and demand. And it's in theory, it's a smart way of doing it, except that unfortunately for the Terra ecosystem, on sort of 11th May, 9th May, Bitcoin began its decline. It went past 34, 35, 32, heading down towards 30. And remember what I mentioned to you, as Bitcoin is levered to the S&P 500, altcoins are levered to Bitcoin, right? So if I said the S&P 500 goes down by 10%, BTC goes down by 20%. Now, if BTC goes down by 10%, altcoins, just other currencies that exist in different blockchains, go down between 20 to 30%, right? So it's levered. So levered play on top of a levered play means Luna collapses rapidly, right? So that puts the entire cryptocurrency market on edge, and a very, very large sum of it, USD whale, as we call it, a crypto whale, ends up selling, $250 million, $280 million of USD. The moment you do that, USD lost its peg, right? From $1, it came to over 0.98. In an already shaken up market, when you see that the most stable of stable coins come from $1 to 0.98, 0.95, that causes you to panic and sell, right? When you sell USD, it loses its peg a little bit more, which causes others to panic and sell. So what you get is a bank run, right? And all the time the algorithm is now on overdrive. So what it's doing is it's effectively giving, okay, the USD price is falling, it's burning USD and minting Luna on the other side, right? To try to maintain the peg. So what ends up happening is Luna on the other side gets demolished, right? So the risk on asset normally, so if you have $18 billion of USD, it's about 1.5 to 2 times collateralized. That means the Luna market cap is about a certain small multiple above USD. But because of the rate at which the algorithm is trying to fix US Terra, Luna just gets decimated. And at one point, I was watching it. It's painful to watch, right? Luna's market cap comes to exactly the Terra, the stable coins market cap. What does that mean, right? When Luna falls below the Terra USD market cap, what does it mean? That means there isn't enough collateral to back USD, and at that point the selling was just pervasive at best, right? The Luna Foundation Guard, which is the guys who are trying to protect USD, starts liquidating their Bitcoin. So if you look at the USD chart, it actually kind of dips, increases, but never comes to $1, and from there on it's down, right? So effectively, the algorithm prints as fast as it possibly can. Luna just disappears. 2 days. Just let this sink in. Luna had about $25 billion of market cap. In 2 days, it was $1 million, right? That is wealth destruction that you haven't seen on a scale before, right? And the reason for that is it had about a couple billion tokens in Luna 2 days before. When I checked it last, it was 7 trillion, right? That's the algorithm trying its best to protect USD, but it couldn't, right? So, I mean, what is this? Is this a casualty of what I mentioned before? Is it of this? Possibly, it was a good idea, but it just didn't work. Why? Because it wasn't based on the economic fundamental, which was that if you're going to peg an asset to another asset, these two assets should at least share some of the similar fundamentals, right? some of the things that have been some of the currencies, for example, that have been, that people have tried to peg the the peso from Argentina, the Venezuelan, Zimbabwe dollar, even Sri Lanka to a certain extent. How did that go? It doesn't work. You can't peg synthetics to assets unless it's backed by the asset that you're pegging it to, right? So that's, I mean, it's sad, right? It's an excellent system, excellent. I mean, it has very, very good promising projects on it, but you can't defeat economics, right? So what does that mean? Okay, such a project with such a lot of innovation and it failed. Does that mean all of cryptocurrency could fail? Like, okay, I'm not going to guarantee that it is going to go up or that it's always going to be there. There is a slight chance that it actually can go to zero, but it's very, very small. Why? Because BTC is a risk on asset and it has nothing to do with stable coins. It is nothing, it isn't pegged to anything. It is its own asset, kind of like Tesla, is kind of like Apple. Just think of Bitcoin as like Visa and MasterCard, except you don't send money, you send tokens of Visa itself. So that so as Bitcoin's network grows, this is called Metcalfe's law. You might want to check it out. The rate at which its value increases is exponential to the amount of network connections that it has, right? So so anyway, if you look at the fundamentals of Bitcoin, I'm just going to talk about Bitcoin for a moment. They are the opposite of what the price is doing. Okay, there is greater adoption. More people are using it. The security, which is measured by the hash rate of the miners, is increasing. Right, the unique wallets that are interacting is increasing, and the amount of people gathering Bitcoin and holding it is also increasing. So it's exactly doing the opposite of what the price is doing. If the price is going down, the fundamentals are all going up. So, I mean, this is what in investment research we search for undervalued asset. Again, I'm not giving any financial advice, but objective analysis out there, right? So, my final thoughts for this is cryptocurrency is an experiment in money, right? Let's take a broader look. If you go back about the history of money, right? Every 100 to 200 years, as Ray Dalio mentioned in his podcast lately, is that currencies, the world reserve currency keeps changing. It's never constant, right? And fiat currencies have come and they have failed. In fact, if you ask over the last 1,000 years, what is the success rate of a fiat currency? And ask someone to have a guess, it's actually 0%. Nothing, not a single currency over the past 1,000 years that began back then has survived till today. And the reason is because they go through these long-term, short-term debt cycles. Powers come, they rise, they get displaced by other powers, etc. Right? So we are in a new system that is still part of the history in which people are trying to choose how a monetary system should be driven rather than a centralized place. That's what we are. So cryptocurrency has the chance to do to finance what the internet did to communication. Back pre the internet, you had fax, you had post, right, to communicate. You had you used phones. You actually walked to the place. After the internet, there's nothing. It's just the HTTPS request protocol, and that's what you use for communication. I mean, you send your love letters through post, and you might use a pigeon if you have one. But otherwise, communication is the internet, and that's an end of it. And this is what cryptocurrency is aiming to do, right? But now I want to hand it over to Lulitha because he has a view on a very different option.
All right. Since we have kind of gone through a lot with the cryptocurrency side and how do I say, more of the macroeconomic climate of things, I want to go into a little bit more of a light-hearted idea, which is selling these pretty pictures on the internet that goes for like millions of dollars, right? So I hope I'll ask for another show of hands, like I'll get from the live audience as well, like anyone who has bought NFT. Okay, there's one. Anyone else? Anyone in the live audience? Oh, there's one more. Okay. 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 So how do I find the live audience?
Now that I can see that.
Mm.
Yep. No, no.
Okay. Okay. All right. So let me. Can I see myself? So to give you a brief example of what an NFT is, I'm not gonna go into like a whole introduction of it, but the idea is that like if you take let's say something like BTC or take any other token, they are essentially fungible. So if I get one Bitcoin, another Bitcoin is equivalent to that. What people wanted to do was that they wanted to find out whether they can create something that is unique, that is not interchangeable. So, for example, there's a particular asset that I have that is unique from all the other assets out there. So, if you take a painting, a unique painting out there across. If you take a deed, the deed is unique across everything else. And why is that important? Because it gives you an ability to give ownership to assets that are unique. And if you think of it, even if you take a look at all these other tradable assets out there, these assets that are unique are the largest assets out there. For example, land is a unique asset type. It's very unique, right? And what is happening right now in the previous like 2000, 2020, 2021, art was what kind of got NFTs. It's real like sort of a trend that got it out. For example, Bored Ape Yacht Club's art of how the how the ape looked resonated with people, and they ended up kind of buying into it. But actually, what people found out through this giant experiment of seeing value across on the internet was that, hey, people wanted a way of storing their online reputation in some other way that is not just how do I say, like having a bunch of cryptos with you. So for example, if you are a person who have a Bored Ape Yacht Club NFT, you are a certain type of person. That's what people wanted to kind of create. So they wanted to create sort of like communities on the internet. And communities already existed on the internet. What happened was that this allowed people to have unique identities for particular communities. And there are very interesting use cases. Like, for example, Bored Ape Yacht Club, they did a token drop where every person who had a Bored Ape Yacht Club NFT was able to claim ape tokens. And what happened was that these ape tokens ended up being tradable. So now I don't have to sell my Bored Ape Yacht Club NFT. I can just sell the ape token that was kind of airdropped to me. So it created a whole different type of utility. And to kind of take you guys through the volumes of things. So in 2022, volumes have drastically reduced from the 2020 and 2021 high. I think people were, how do I say, if you take the US, a lot of people were given like buckets of cash printed out. So they ended up using that to buy crypto, trade NFTs, etc. But now I think with the market volatility, the volume is getting lower. And but still there's like a lot of very innovative projects like this one that I'm showing on the right side over here is a project called Moonbirds. It's basically like a project where you have like a profile picture that allows you to be part of this sort of like a club. It's an alternative for like Bored Ape Yacht Club. And the one that's on the bottom of it is actually a part of like this video game that Bored Ape Yacht Club is doing. Basically, Yuga Labs is doing with this other token, basically ape tokens, and the other side sort of like metaverse land NFTs that they're dropping. So this whole idea of utility on NFT is actually built on top of Ether or like a chain. And the idea is that you can have now games that are built across. And if you take a game like, let's say, GTA or something, all the assets are actually owned by the game developer. Whereas here, the assets are actually owned by people who actually own it. So this, whoever that, the ape over there is owned by a particular person. The land that he's sitting on is owned by a particular person. This concept of ownership is going to be something very interesting in the future when we are looking at it, right? And I'll give a very interesting example of how powerful online assets are is actually domains. So imagine you own google.com. It's like a very valuable asset, right? That's why Google owns google.com, right? Same as it's basically some asset on the internet, right? Something like that. So ENS is actually a provider that's trying to build domains that are decentralized. And this is actually an NFT that's out there where you can go and purchase whatever your name.eth, which is the unique domain across. So now there's a rising value into those kind of NFTs against like decentralized name services. So this is like a basic idea of what's happening on an overview of the market. But at the same time, there's a very interesting thing happening in Solana, which is another chain that's, how do I say, a lot more faster than the rest of the chains. And there's a big use case built on it top of with NFTs. Because the next, for example, Ether is where most NFTs are being traded. But slowly Solana is taking a leap ahead. So trading volume on Solana has increased like 91% over the last month. And more people from the Ether ecosystem are migrating into Solana for a couple of reasons. One giant reason is that the fees in Ether is exorbitantly high to do anything. So for example, for you to even build any kind of utility, anything around it, it's extremely, like it's too high. So you can't do a lot of things. But on Solana, the cost of doing transactions is insignificant. So you can do all sorts of use cases on top of it, which I will go to a little bit in the last one, sorry. And like, for example, there was a collection called OK Bears. I don't think I have a picture of that, but what happened was that collection it's a 10,000 NFT collection, and they launched it, and a lot of influencers or people who bought Ether NFTs got into it, and they got something that was valued at about 5 sol into about 150 sol within about 3 to 5 days. So they basically kind of took it and made it a blue chip project within like 3 to 5 days. And with it, like there comes a lot of other things. Like, for example, there's a fight that's going on between Ether ecosystem and the Solana ecosystem. So people are now, there's a, how do I say, there's a derivative collection where somebody has cloned the collection of Bored Ape Yacht Club and put it on Solana and calling it Solana Bored Ape Solana Club. And that's also rising in volume because it's like a meme to trade things, and things are getting popular, right? So there's a lot of interesting action happening. And one of the other things that we kind of, if you look at it on a broader spectrum, you'll notice is that on Ether ecosystem, the value of NFTs have plummeted a lot. When I say that, what I'm saying is that if let's say an NFT is valued at, let's say, 30 ETH, it goes down to like about 12. So value on ETH is going down. Whereas actually the value of Ether is also going down on the real market, right? But what's interesting in Solana is that Solana's value in, let's take a PFP, is actually holding steady. Solana value has gone down from 100 to about $50, but the value of what it's been sold at has not changed, which is something very interesting that people are starting to notice in the whole ecosystem. And one of the things that people are saying is that if you take like a blue chip, or when I say a blue chip, a very known valuable collection on Solana, the entry value point for a valuable collection in Solana is about somewhere close to about $2,000 to $5,000, which for a person in the US, it's quite affordable compared to something like, let's take Ether, which is like $70,000, which is exorbitantly high. So people are, more and more people, market people are entering because the price tag on like dollar to Solana price tag is low. So if let's take, if Solana value goes from 50 to 200, the underlying asset value also goes 4x of value. So there is a very interesting adoption curve that will happen in the next couple of years. These are some of the, so OpenCA is the largest NFT marketplace, and now it supports Solana as well. And Magic Eden is purely a Solana based marketplace. So volumes on Magic Eden now has gotten into the same level of volume as OpenCA, which is a very interesting scenario because it's only one chain and the other one has like both the chains been there. So what's the future of these interesting, pretty pictures across on the internet, right? NFTs are also going through a big cycle. So there's a lot of people who are just, going to Fiverr and getting someone to draw some art, put in the collection, minting it, and then taking the money and running it, right? So there's a lot of people who are, this concept is called rug pulling. So you just pull the rug and you basically say that, hey, we are going to do this and that and so many different things, but then you just disappear, which you can do because on one of the real big proponents in the Web3 or like this decentralized space is that you have anonymity. So anonymity means that you have the risk of people pulling up, right? But at the same time, now people have realized that and they have created ways of doxing people. So what happens is that there are intermediaries who the people would trust, who the collection creators or people who are developers will go and expose themselves to or dox themselves to build that trust. So that rug pulling or kind of going out with your money is like reduced. And next key thing is about building more utility to these NFT collections. Like it can't just be a picture that's out there. It has to have some sort of a real world use case. So for example, there is a project called Portals, which is a way of giving, the utility is given by, if you have access to the portals, that means you have access to a metaverse game. Again, utility doesn't mean that it has to be physically tangible. It can be in the metaverse or in the internet, but it needs to have some sort of value. It can't be just a picture. So another example of this is actually real estate. So people are going to, one of the big problems in real estate is that it's very hard for a retail investor to get into real estate and have enough liquidity as well, because real estate requires you to go through a lot of licensing regulation. Like imagine you want to buy a piece of land in the US, you can't do that. It doesn't work there. And imagine you want to buy a piece of land with like $1,000, you can't do that either because it's not fractionalized. So what people are doing now is trying to fractionalize these assets through NFTs, give liquidity so that you can break a large land into small pieces. At the same time, remove the regulatory requirements required for you to own that property. So there are interesting use cases like that people are building with this kind of technology. That's one scenario. And the other biggest thing that we have realized is that what these NFT collections are allowing people to do is to bring together a community of people. So if you really look at it, if you really think of anything in the world, the world is like all the wealth that's been created is created by people, and people have created wealth with networks. So if you take, for example, the United States, it's a network of people who believe that United States is the greatest country on earth, and they mine resources, they created a Fed, they created a dollar, and they created all of that stuff. So just like that, people are going and creating a collection of Bored Apes, building their own tokens, own land. It's a revolution in its own way, right? And what happens with this is that when you can build communities, you can start kind of creating exclusive clubs and exclusive networks. And few of the innovations that they are doing is that there's a project called DGods, which is one of the blue chip projects on Solana. What happens is that this there's another concept called a DAO, where everybody who owns this NFT becomes part of an organization, and that organization can collectively decide to do certain things. And how can it collectively decide things? Because it actually has money. That's one of the biggest problems, that if you take a lot of organizations or like voluntary organizations or partnerships, they don't have, is that they don't have a way of managing or collecting pools of cash. How do they do that? Is by collecting royalties from the secondary market sales. So with these, for example, DGods, with their royalties, they actually bought a basketball team for like about $500,000. They bought a basketball team. They are building utility around that basketball team and going to the real world. So if you really look on the books, they have like a $500,000 asset on the books for an organization. So there is some interesting cases built on it. That's the future of sort of the NFT side of it. And the other cutting edge, or the infrastructure layer underneath all of this, is actually this idea of, there's like, for example, in the traditional finance, there's a financial services piece where you allow people to exchange, basically what banks do. They become intermediaries and they're able to exchange one currency to another. They can provide loans, they can provide liquidity, etc. What people are trying to do also is to build this kind of institutions without actually an institution. They're trying to do it with decentralized mechanisms. For example, if you say that, hey, I want to exchange, I think most of you guys would have traded things across with Binance. If you want to go and say, hey, I want to exchange, let's take, I want to use USDT and buy Bitcoin. You have to do like a buy and sell order, and the buy price has to match the sell price, and then only the exchange will happen. But that means that there is a centralized party that's taking in your buy order, taking in your sell order, taking in your money from one side of this token and the other side. So there is a party who controls all of this. And so what they have done now is they have created an innovation where there are pools that you can always go to with, let's say, USDT or Bitcoin, where you can get the other asset as an exchange. And these are called automated market makers. So swapping mechanisms. So Uniswap is one of the very prominent ones that they have. They are the ones who came up with the algorithm of doing automated market makers. And there are other interesting projects where they are doing even this whole Binance type of exchange, DYDX, Mango Markets. They have done it in a mechanism where you can do it completely on the chain without a centralized party. So I can put a buy order, you can put a sell order, and it will automatically match price without a centralized party and exchange the funds. So all of this happens without an organization having access to any of your assets. It's all happening through the blockchain. So this is the kind of interesting things people are doing on top of it. And when you are in the cutting edge of innovation, what happens is there is a huge chance of things failing. And if you take cryptocurrency market on a whole, what happens is that since there's a lot of money printing in 2020, things grew too fast, too soon. So if you take Terra USD was something that was started in 2018, it grew to about 8 billion in market cap with so little of years. So that's the reality of innovation, right? So I think most of these things could actually fail, but again, that's the price that you pay to have Amazon or Google or any of these luxuries we enjoy right now. That's pretty much all I have on my end. And if anybody has any questions, we are happy to take them on, whether it's online or whether it's from the party.
Kalana, who's our co-founder and co-CEO, has a small announcement to make since we are on the topic of?
Yeah, since we are just here, I'll just do a very quick introduction on our team.
Do you want to sit here?
Yeah, sure. So we are Hyperglade. We are an end-to-end NFT services provider company. We have this vision of making NFTs more accessible to everybody and democratizing NFTs. NFT started as a crypto-based asset, but it needs to be adopted by the masses. So we are in the process of making it easier to buy NFTs, easier to sell NFTs, easier to create an NFTs and sell it to a market as well. And we have an excellent team which has a lot of computer science background, fintech background, and marketing exposure. We have a bunch of services that we provide, from project management in the NFT space, tech development, marketing to consulting. And we have our own set of products, our own NFT collection coming out towards the end of the year. And we have one NFT type that we are introducing. You may have this question: if you buy an NFT, do I have the rights to duplicate it? Can I make a t-shirt out of that and sell it? So that's not clear. Some NFTs give you the right to do that. Some NFTs don't give you the right to do that. So we are coming up with an NFT type that will make it much clearer and much easier to do exactly that as well. And we also have a marketplace that is making it very easy to buy and sell NFTs. You don't need a cryptocurrency, you don't need cryptos, you don't need integrated wallets. You just sign up like you do with Binance, like your email address, contact number, and then buy and sell NFTs. So these are some of the products we are working on. And right now we are working on this project here, Sri Lanka, to help the Sri Lankan medicine crisis. As you all may know, Sri Lanka is going through a massive shortage of critical medicine and equipment. So we have a 10,000 NFT collection that we created with the help of Sri Lankan creators who are inspired by the struggle of the people, the protests that are ongoing. So we have taken those artworks, created NFTs out of it, and you can buy an NFT for $100. 90% goes to helping the cause and 10% goes to the artist. And yeah, thank you very much. So if you have any questions for these guys, please go ahead.
Questions. So great. Okay.
Algorithmic that like Terra, well, let's say that has works.
Yeah.
But obviously Terra
Yes,
so it's spectacular.
exactly.
Yeah, what do you think that's the difference?
Right.
Do you guys want to repeat questions, set a summary from Giovanna?
Shall I say? I think the question is, what's the future holding for algorithmic stablecoin? Because the current one that the major one that was tried failed in a big way, right? So what would that mean for the future? I have a couple of takes to it, right? And the first take is that I think it's the algorithmic. If you look at the algorithmic stablecoins market, people have done iterations before. Like Iron Finance tried something with 70% USDC backing, and now they tried algorithmic, like basically having having a risk token and a stable token. So I think different people are trying different things. Recently, like there's a new one called USDC that's kind of based on the Tron chain. I think that it's going to be very interesting how they regain the retail trust. Because one of the things that I think Luna really got into was that it got all sorts of retail investors to put their savings on Anchor, which was their kind of the protocol that allowed them to cheat. So it's going to be interesting to see how they get that trust. And the other one is that I think this will open the gate for central bank owned stable coins. That's the, that's
Just, yeah. So,
yeah.
yeah, just a couple of my thoughts as well to add on to Tulita's exactly. So we are in a paradoxical position here, right? If the Luna ecosystem was big enough, right? Then the rate at which minting USD to, sorry, absorbing or destroying or burning USD to create Luna wouldn't have had an impact. So what I'm going to do is do a thought experiment. Imagine Luna as an ecosystem was $1 trillion, right? And USD as a stable coin was how much? $20 billion. Even if all of the USD market cap was wiped off, it won't affect Luna. What happened here was Luna, the Terra ecosystem grew with the flagship product being the stablecoin, right? So if something happened to the stablecoin, it takes the ecosystem down with it. So in my view, what needs to happen is somebody needs to build a system, it's Bitcoin size, right? Bitcoin size, Ethereum size, or we'll call it Ethereum size, that is self-sufficient by itself. And if you build something like that, and it has it's set of systems, ecosystems, synthetic assets, everything, so many real-world utilities, and then off to the side have a stable coin mechanism that's backed by this currency, then it shouldn't be a problem, right? The ambition here was, if you ask anyone, okay, do you know Terra, the Terra ecosystem? Oh yes, why? Because the Anchor protocol. They don't know it because of Mirror protocol. They don't know it because of low Terra and several other things, right? If your system is so concentrated on its success of that, and that success needs to be a stable coin, should something happen to the stable coin, that ecosystem gets destroyed. So if in the future Ethereum, after all of this is done and Ethereum is stable, it's stable and there is no recession risk. If Ethereum comes and says, hey, we are going to create a stable coin, but it's somehow it has only about 5% savings, for example. So not too many people are going to come onto it, but we are going to back it with US dollars with Ethereum, and we are going to burn Ethereum somehow. I'm just speculating, right? We are going to burn Ethereum somehow to keep your currency stable. I mean, Ethereum is even now it's a $400 billion market cap. Even if it was Terra size, it's 20 billion, it's 120. Fine, Ethereum will take a hit, but it's not going to take the ecosystem down with it. So I think the way, that's my personal opinion, obviously, is that you can't, the main utility of something that creates a stable coin can't be the stable coin by itself. It has to be something else.
Yeah, and to add to Gamika's point, it's like the run on the bank, right? So like take, George Soros versus the pound, or like the Asian financial crisis in 1997, like even Lankan, you could get cornered, right? You could be on the other side of the equation. And if the underlying economic conditions or the utilities don't add to it, there'll either be a discount or a premium. So I think the valuation, the arbitrage comes through like the perceived utility or the perceived underlying activity. So, and to add to your other point about algorithmic trading, even in regular, like if you have a quant fund, even in commodities. So I used to be a part of a commodities quant fund. Even there, the desired results were seldom met because it's all trigger points. I said the algorithm, some of the variables might just be a fat finger. That has happened with the Citibank debacle, I think, in 2011. So there are so many underlying facts right now. It's hard to say this is the exact science of it. It'll be an evolving thing, right? So that's how we think, and with smart contracts and people becoming a bit more kind of aware of it. And another issue which might come, is not related, is of late there's a lot of what you call centralized legal opinions being sought for digital assets. Like yesterday, there's a board ape issue going on in Singapore where they had put it on, what is that, NFT, where you can lend the NFT and then buy it back later. So he's arguing against a smart contract in a court of law. So which again defeats the purpose of decentralization or centralization. So it's a philosophical viewpoint. So maybe sometimes we can use first principles and come up with economic thesis that backs it. So that's kind of or 2
So
cents.
to give an example, NIA is trying something with the USN. So they have created a new token called USN, and they're trying to do something with the same kind of idea. I mean, it's very interesting to be on, like in the cutting edge of innovation, because if you take good example of this is if you take something like the US economy, like US dollar is so powerful because of a couple of reasons. One is it has like the biggest military power. Second one is it has innovation. So you need to have, it's not because the dollar is powerful, right? Same thing, same
It's a
problem
good
with
point.
ecosystem.
It's a
Right.
good point. I like it. But the US dollar, the US dollar is UST, and the Luna ecosystem is the USE economy, and that technically gives them exorbitant power to be able to print USD out of thin air, right? But it's not like the US economy is going to go down anytime soon, right? There's no way.
And if you take China, for example, they're having their own blockchain. So what they're trying to do is, if you look at the top 10 ports in the world, almost like 70% that are Chinese. So they rolled out the first government entity to government entity based smart contract there. So it's easy for them to, China is a bit of an outlier because it's a more controlled environment, but they're using the underlying technology, which is blockchain, to kind of reap the benefits of, decentralization. So I think it'll be interesting to see. This is like how we consider it's 1995 of the internet. So, so that's our thesis.
That's the
It's
thesis, exactly.
Maybe we should throw a 90s party.
Any further questions?
So yeah.
Sorry, question. When it comes to the founders of each of these coins, it's like there's a lot of blame put on the founder of, I think, Terra in the news. Some people say startup ecosystem is that the founder of the product is that's your beloved coin. Does that apply to cryptocurrency? Should we care who actually comes up with these coins, or do we look at the other variables?
I mean,
You want to go?
It's a very interesting problem because how do I say, right? On the general idea of the internet, or like the internet, is to be able to create meritocracy. So that means that you are able to raise you are able to back what you're saying with something tangible out. So if you take Terra as an ecosystem, or Quants, like whatever he did with it, it actually had a lot of backing. But at the same time, like human nature is such that you need a scapegoat, or basically you need a person. For example, Elon Musk, like why Tesla has the highest market cap combined of all the automakers out there, is not because Tesla makes great cars. It's because there is Elon Musk.
and
It's not a
I think
projects in the space that are by people you don't know.
Exactly.
There are easy projects, there are terrible projects. It's sort of like a
Yeah.
you have made.
So yes, I find this whole thing like a real enigma when it comes to human behavior and conscience, in terms of we're so used to seeing a person, a leader, and now this whole thing, I feel like it's almost like a how do I say it, like shifting almost humanity, like how you trust leadership, I'm very fascinated.
Yeah, and also some of the underlying, if you take for example, Bitcoin, it's like a mathematical equation, right? So like it's whoever puts it together. So it's like, I mean, if you look at the world in like binary form, or like, look at the underlying sequences, like DNA has a sequence, right? So everything has a sequence. So whoever gets the best pattern, kind of thing, might. I think there's a certain.
I think to your point, that illustrates the great debate between Bitcoin and everything else, right? So everything else that is big, I'm talking about, generally has a founder, for example, associated with it, or set of people that maybe you know or maybe you don't know. Bitcoin is the only one where you have no clue where the founders are, and it's the only software that has run for 12 to 13 years without anything. That's incredible. You just go and ask someone who does software how long their software will run without anything. You have to make your, you have to do your own research.
Maybe it's reverse psychology.
Yeah, I mean, it's interesting because like that D-Gods collection that I showed, like the founder of that D-God collection is not a doxed person. Right? So they go on like even video calls, and this guy just talks, and he's like wearing, it's like complete dark, and he has a face mask on, and it just says D-God on the mouth, and he just talks, and those people listen to it. It's like. So it's interesting how the internet works.
Thanks, guys, for the time. Minuri, any questions, anything? Thanks, guys, for joining us
Yeah.
online. Apologies for the technical issues earlier today.
Actually improvise.
Yeah, we had a bit of a, situation outside with protesters and roadblocks and whatnot. I mean, again, it's a difficult time for everyone globally and in Sri Lanka, so hope everyone's well and safe. And let's, roll with the punches. So on behalf of Hatch, thank you, Minri. And on behalf of Hyperclip, thank you as well. Thanks. Take care.